My name is Gao Shixian, and I'm the general manager of a Chinese investment company. My job responsibility is to build investment portfolio and to achieve the good investment return. Our management skill is about 2.6 billion euros. The title of my thesis is Portfolio Management Strategy with Public Offering of Funds, and my supervisor is Professor.
Yes, excuse me.
Yeah.
Due to noise, can you speak slowly, more slowly, please?
Yeah, more slowly, right? Yeah, okay.
Because it's too noisy.
The title of my thesis is Portfolio Management Strategy with Public Offering of Funds, and my supervisor is Professor Marco Heyman. My thesis is including 8 chapters, which are the introduction, literature review, and hypothesis development, research design, analysis of investment strategies, hypothesis testing, and conclusion, managerial recommendation, bibliography, detailed overview of thesis. Now let's begin the first chapter. The content of the chapter 1 is a basic introduction to the research content, including research questions being addressed, how to adopt a classic portfolio management strategy to the Chinese stock market to help investors earn sustainable profit. The importance of this research is, as of 2023, there have been over 750 million investors in Chinese public offering of funds, and it has become the most important investment product in Chinese stock market. So the significance of this study is very significant, can help hundreds of millions of investors. And the contribution to the research field I list 4. The first is fill the gap in the application of portfolio management theory in Chinese market. Second is promote the better development of the stock market in the future. Third is provide a very good strategy to help investors to obtain sustainable income. Last, it can help Chinese stock market to attract long-term funds into the market. And the methodology of this research is the research process starts with literature and theory, propose hypothesis, collect data to validate hypothesis, and establish a new theory. The research method used in this research is the quantitative analysis tool method, and the main statistical analysis tool is SPSS software, and all the data source is come from the Chinese stock open market. The quantity is more than 20,000. And next is the overview of Chinese stock market. The market value is more than 11.3 trillion euros. And the outside value of public offering of funds is already more than 3.4 trillion euros. Also, the Chinese stock market already the second largest market in the world, but almost 95% investors still do not have investment strategy, and every year more than 70% investors lose money. There are many differences between the Chinese stock market and the other markets, but the biggest difference is that the investors in Chinese stock market is merely retail investors, and the retail investor cannot short the stock in this market. And next is the overview of portfolio management and public offering of funds. Let me introduce what is portfolio management. It refers to the management activity carried out by the investment manager to diversify the asset according to the asset selection theory and portfolio theory, so as to achieve the investment purpose of dispersing risk and improving efficiency. The public offering of funds refers to the security investment fund that resides funds from public investors in an open manner and takes securities as the main investment object. It is a kind of ETF in Europe is similar. The exchange, the trade bond issue in Europe, but it's based on the Chinese law. So the public offering form is a kind of ETF issued in China in accordance with Chinese law. And the end of the chapter 1 is the area of research and relevance. The research area is portfolio management. The relevance is the public offering of funds is the bridge between investors and the stock market and has becoming the most important way for ordinary investors to participate in the Chinese stock market. And the research goal is to obtain an investment strategy with public offering of funds as the investment target, and the yield can outperform the market. And the second chapter is literature review and capacity development. There are a total of 7 classic portfolio theories in this chapter. The first is the investment portfolio theory. It proposed the first time by the Harry Markowitz in 1952. His research funding is based on his quantitative analysis of return and risk. The investment portfolio theory is first time systematically proposed. The second is the mean variance model. It's also proposed by Harry Markowitz in 1952. His research funding is the return and risk of the portfolio is a functional relationship, and risk can be computed within a certain range when the expected return target is achieved. The third is the single factor model proposed by William Schwab in 1963. His research funding is the return rate of single security is affected by only one factor, that is the stock market index of the entire stock market. And then 1 year later, he proposed another theory, is capital upside pricing model. And the research funding is the expected yield of security consists of 2 parts: risk-free interest rate and risk premium. Next is arbitrage pricing model proposed by Stephen Ross in 1976. His research funding is the asset price is the result driven by multiple factors. Each factor multiplied by its beta coefficient of asset price plus the risk-free rate of return obtaining the value of the asset. Then is the Fama Branch 3-factor model proposed by Fama Branch in 1992. And their research funding is the market value, book-to-market ratio, and P ratio of listed companies can well explain the difference in stock return. Last is the Kappa 4-factor model proposed by Kappa in 1995. His research funding is adding momentum factor to Fama Prime 3-factor model can well reveal the return of the fund. From the development of this process or the classic portfolio theory above, we can see that their theories come from 1 factor to 2 factors, 3 factors, 4 factors, and multiple factors, and we can get conclusion that the portfolio management is a balance between risk and return. Investment income is driven by factors. The more factors you get, the more accurate. And the sufficient factors can effectively measure the return of the fund portfolio. Next is the classic development. Based on all the classic portfolio theories above and over 15 years of fund investment experience in Chinese market, I found 3 kinds of factors have the biggest impact for the yield of the fund investment portfolio. That is the risk and return factor, industry factor, and the timing factor. So here I propose 3 investment methods to apply these 3 kinds of factors. I name it the multi-factor investment method, the popular industry method, and the market sensitive investment method. Corresponding, I propose the 4 hypotheses to test the 3 investment methods. They are the yield. That are the yield of each investment method will outperform the market, and the combination of the 3 investment methods will outperform the market and each individual method. Here, I use the Shanghai Stock Exchange Index as the market benchmark. The content of Chapter 3 is the research design, including research model and analytical framework. In this research design, all the three investment methods are follow the same 4 steps. First step is the data preparation. Second step is the data analysis. Third step is we can get a conclusion. The fourth is the formation method. And the multi-factor investment method and popular industry investment method are both the portfolio construction method, and the popular industry investment method and stock market sensitive investment method are both the portfolio operation method. So for all these three investment methods constitute the portfolio management strategy we want to get today. And the fourth and the fifth, the Chapter 4 and Chapter 5 are the analysis process and hypothesis testing of the three investment methods. And in the hypothesis testing, I use 2 ways to test. One is the long-term yield, and the second is statistical testing. For the multi-factor investment method, the problem that I want to solve is how to select the fund from that can get high yield and form a basic investment portfolio first from the tens or seconds in the market or funds in the market. So first we integrate the 3 investment portfolio and found that the intermediary fund portfolio can get obvious high yield return by statistical analysis method, analyzing the fund common characteristics of the intermediary fund portfolio. We can obtain the multi-factor investment method. The multi-factor investment method is a 25 multi-factor stock selection strategy that selects an investment target through a set of stock selection factors and construct an investment portfolio. The stock selection factors, including the investment return rate in the top 50%, the fund establishment period must more than 3 years, the annualized return rate should higher than 15%, the Sharpe ratio should lower than 2.5, the logic pullback trading, the hit rate should less than 30%. Then through the hypothesis testing, we get results that both the long-term yield and the hypothesis testing yield all can outperform the market. The second is the popular industry investment method. In the analysis of this method, the problem that I want to solve is how to select the funds that invest in the highest yield industry in each year from the basic investment portfolio we already built above and form the final investment portfolio for that year. We found that in the same period, in the same year, investing in different industries will bring great income difference, and the high growth industry have 2 characteristics. One is high growth, second is sustainability of the growth. By analyzing the high growth industry yield data from each month and year from past 11 years, we can get the conclusion of the popular industry investment method. That is by analyzing the top 10 fund industries with monthly growth from January to March of each year. This is the first 3 months. We select the industries that appear together, appear 2 times in the first 3 months, which are the target industries we need to invest in. Then through the hypothesis testing, we get the result that both long-term yield and hypothesis testing yield all can outperform the market. The third is the market sentiment investment method. In analysis of this method, the problem that I want to solve is for the entire investment portfolio, how to buy low and sell high. When to buy and when to sell can avoid the overall market falling time and further improve the portfolio yield. Investor sentiment always change with the change of the stock price, and the change of the investor sentiment also change the stock price. So in each round of the stock market rise and fall cycles, earnings earned by the profitable investors all come from the trapped investors. Investor profit come from the loss of other investors. Through the statistical data analysis, we found that if the stock market in an upward trend, when the proportion of profitable investors more than 70%, more than 88% probability that the stock market is close to starting to decline. And if the stock market is a downward trend, when the proportion of the profitable investor less than 35%, more than 83% probability that the stock market is close to starting to rise. So we get the conclusion of the market sentiment investment method that in timing trading strategy, investors should sell stocks when the proportion of the profitable investor reaches 70%, and buy stocks when the proportion of profitable investors falls below 35% in order to achieve buy low and sell high and got the profit. Then through the hypothesis testing, we got the result that both the long-term yield and the hypothesis testing yield, this method can outperform the market. And the last is the combination use of the three investment methods. By using these three investment methods in combination, we got the main result of this research is obtain a complete set of investment portfolio strategy with public offering of funds as investment target. And the yield can outperform the market, including the multi-factor, the popular industry, and the market sentiment investment method. These three investment methods all can outperform the market, and the combination of these three investment methods can outperform the market and can outperform each individual method. The last chapter is the chapter 6. The content of this chapter is the managerial recommendation. We have 6 parts. That is the important value of the research. The research results are widely applied. Suggestions for the medium size and small investors, suggestions for institutional investors, and risk management and difficult to overcome. And through the research in this paper, I also discovered the limits and potential extension of this study. The work limit is due to the uncertainty in the market. The investment strategy can greatly help the investor to improve their return, but it cannot to fully defeat the market. And no one can defeat the market. And the potential extensions are the method used in this study can also used for investment strategy research with the individual stocks as the investment target, and also can be used for the investment strategy research in other regional stock markets, such as in America, in European. I also think it's useful, but it's different. And the last content of the chapter 7 is bibliography and 35 reference. I'm very thankful to all the authors for their contribution and help. The appendix content is listed the partial data used in the study on the popular industry investment method in chapter 4 because the data is too much, so I put it in the appendix. The last chapter is chapter 8. It's a detailed overview of the thesis, which is a summary of the entire thesis according to the content of each chapter. And above is all my presentation. Thank you very much, my dear professors. Thank you.
Thank you very much, Mr. Gao, for your presentation.